Welcome back to CryptoByte, everyone. As usual, we've got the latest and hottest news of the day. We've got another announcement from Trust Swap. Also going to be looking at Sushi Swap again. We're also going to be looking how there was a huge blockchain vulnerability and also how COVID-19 shook out retail investors, but Bitcoin whales actually remained intact. So let's dive straight into it. Looking at the market on CoinGecko.com, we've got Bitcoin doing minus 1.4% in the last 24 hours, Ethereum minus 6.1%, XRP minus 3.1%, Chainlink minus 5%, Polkadot minus 3.4%, and Binance Coin again doing plus 8.7% in the last 24 hours, 55% in the last 7 days. Great news for anybody that's holding Binance Coin. Looking at the top performing coins in the last 24 hours, we've got Waves on the top, almost 15%, OKB 11%, Aragon 9%, Binance Coin as we talk, we've got Kusama 8.5%. Not much today, not much positives, and that's about it here. So we've got only a few that's positive. And looking at the negatives, we've got quite a huge red market today. We've got the YFI and YFE minus 23 and minus 17%. We've got UMA minus 13%, Synthetics Network minus 12%, and Blockstack minus 12%. And quite a lot of other projects that were around the minus 10% section. Okay, taking you to Sushi Swap again. It seems like we've getting news about Sushi Swap quite on a regular basis, but I found this one quite interesting, and this is how Uniswap takes lead over Sushi Swap less than 24 hours after Sushi rewards drop, and that was less than a day after Sushi block rewards for liquidity providers dropped from 1,000 tokens to just 100, so they've dropped it by 90%, and it shows that there's no loyalty among yield farmers. And the total value locked on Sushi Swap fell from 1.5 billion worth of crypto assets on Saturday to 885 million as of press time, which was around only 24 hours between the gap, so almost dropped in half. And even though the total value locked on Sushi Swap fell from 1.5 billion to 885 million, the price only has dropped from $2.45 to $2.23 in the same time period. This shows to me that actually people do believe in the Sushi token as a whole, but they just don't want to lock their value anymore in Sushi Swap, and we can see the migration moving from Sushi Swap back to Uniswap. The initial block rewards of 1,000 were designed only to convince Uniswap LPs to entrust their LP tokens to Sushi Swap so that it could migrate a large portion of Uniswap assets to Sushi Swap when it went live. And if you're wondering what LPs are, it's the liquidity pools token. So if you do give Uniswap your liquidity, you will get a LP, basically a token, and you could use that to basically farm other tokens, and in this case it was Sushi. And as this happens, Uniswap ended the migration with roughly double the assets it had before Sushi Swap was announced actually. So taking you to DeFi pools, on Uniswap we can see the total value locked in US dollars on Uniswap has dropped on September the 10th to 400 million, then bouncing back the next day to 960 million, and now it's at around 806 million US dollars. So it's pushing back, and I believe Uniswap is actually getting all the initial investors back. And this is because their liquidity providers are actually getting only 100 now sushis instead of 1,000 sushis per block. So it's dropped by 90%, and I see how people want to go back to Uniswap now. Okay, the next article is how Bitcoin engineers rediscover huge blockchain vulnerability, okay? And that was in the Bitcoin network that is now fixed, but it could have led to entire systems of nodes being shut down completely. But luckily, hackers never took advantage of the bug. I believe that hackers actually never found the bug because I don't think the Bitcoin network is actually that lucky, and hackers would actually have taken advantage of the bug if they could. So very good that those engineers have actually found that before hackers. And the developers discovered the bug in 2018 and rediscovered the bug in a number of other blockchains this year, and they have published a paper of their findings so far. Also, the Litecoin and Namecoin blockchains were also at risk, and miners and exchanges running older versions of Bitcoin software may still be at risk, but most people running nodes will have the most up-to-date software. And a direct quote from the developers, "You are likely already protected, otherwise make sure to upgrade." So quite good news here, and happy that everything's been fixed and that those hackers actually didn't take advantage. So let's move on to the next article. Here we have COVID-19 shook out retail investors but emboldened Bitcoin whales from a report recently, and that report was from OKX Insights and Catalogue. And this new research, which looked at on-chain Bitcoin transaction data from January to the beginning of August 2022, and it found that retail investors actually largely pulled back and took a wait and see strategy with Bitcoin to see how it builds up. Larger, possibly more institutional investors, on the other hand, accumulated Bitcoin when the dip happened. And here looking at the number of transactions of less than 0.1 Bitcoin, which is a tenth of a coin, and this made actually the bulk of Bitcoin movements and more closely track price fluctuations. And we can see here that the activity and the numbers of transactions of less than 0.1 Bitcoin has dropped dramatically when the price dropped between March and April, just to see what happens. And when it did reach 10k mark, we had another spike down, and now it's just building up again. So good to see. But it's when the data moves to track transactions over 1 Bitcoin which becomes then interesting. And as Bitcoin approaches the $10,000 mark, the number of transactions between 1,000 and 5,000 Bitcoins, and we call those whales, continue to go up since the end of June, even as the price began to consolidate. Transactions of 5,000 Bitcoins and upwards also saw spikes from mid-May to mid-July, and two potential conclusions from this is that cryptocurrency exchanges may have been shifting coins in various wallets for different reasons. Most likely would be security, or that large institutional investors entered the market and accumulated Bitcoin in anticipation of prices increasing or decreasing. The report noted that COVID-19's impact on global markets might have caused big investors to turn to Bitcoin as a hedge against fiat inflation. And this is why I see it at, guys. I see most big investors and retail investors eventually also realizing that Bitcoin might be a hedge against fiat inflation. And looking at the number of transactions between 5 and 10,000 Bitcoins saw a dramatic increase throughout the summer of Bitcoin's price consolidation. And this is from the research graph from Catalogue. And we can see here that when the price actually dropped, the activity has increased. And since the price of Bitcoin went up to $10,000, here you can see that the spikes of the transactions are actually going up the roof. So from this we can make the conclusion that either cryptocurrency exchanges are moving them due to security, or that large investors are actually buying up or moving their wallets. And before we move on to the next article, we have Cointelegraph reporting that Bitcoin prices are boring right now and stable, as you guys know, but it could hit $16,000 if the resistance level breaks. Great news here, very bullish, and I can see that happening very shortly. Okay, I wanted to take you guys through the graphs that I look at quite heavily, and this is through Glassnode Studios, and this is the Bitcoin percent supply in profit. And I want to show to you guys how actually this is very significant for you to find out if there's actually going to be a sell-off or a buy. And we can see here that this is the percentage of people in profit. The orange line is the percentage of people in profit, and the gray line is the price of Bitcoin. So going back to July 17, we can see here that a lot of times when it has gone up almost to 98, 95, but above that line, we can see people taking profits. So we see here when it was above, people took profits and it's dropped, and then when it dropped down to just below 80%, people has actually buyed back in, and we see a lot of people actually keeping their profits here until we see a heavy drop in price and heavy percentage increase. So how I am actually concluding this is that we're looking at the same metric that we looked at 2017. So I'm trying to look at something that is similar, and what we're seeing is here that people are in profit quite highly, 95 and plus %. And what I'm trying to look at right now is that the metrics right now is very similar to the 2017, which is that the people in profit is above 90%, but they do remain strong and don't sell out. So we can see that happening here in July 9, 2019, people straight away took their profits and we've seen a drop dramatically. So hopefully this doesn't happen again and we can see it going up the line again. So this was it for the video, guys. Quite a short one, but I don't want to give you guys news that I don't find necessarily interesting. So I'll see you guys tomorrow again, and leave me a comment below what you thought about this video, and I'll see you guys tomorrow. Bye bye.